All right, guys. Well, happy Monday. We will get the show on the road. A really, really busy week ahead and a lot of very important news. Um, not non-Iran war, which is, I feel like, has been our theme for the past almost 2 months now. Um, so there's a lot going on. So I'm going to jump right in. I'm going to share my screen and I'm going to start today with the economic calendar because there's a variety of events this week that are unfolding that I think all have the potential to be market movers. So we'll start here before we jump into the charts. So let me share my screen here. And all right. Duba, can you see the economic calendar? Cool.
You are
Awesome.
good, sir.
Okay. All right. So for the past 4, 5, 6 months, the Federal Reserve's meetings have been less significant than I would say they are historically for two reasons, really. One is the Fed has been on a pausing mode. They're not hiking rates, they're not cutting rates, they're kind of letting the market dictate what to do. And so there hasn't been a lot of Fed activity. And the Fed Chair Powell's term is coming to an end. And his last meeting as Fed Chair is this Wednesday. So 2 o'clock on Wednesday, that's this month's Fed meeting. No expectations of any hikes, of any cuts, of any comments that will be market moving. But it is Chair Powell's last chairman meeting as chair. Kevin Warsh, who is the president's nominee, will take over at the next meeting in June. And it's been a little bit up in the air how quickly his confirmation would happen. Typical Washington politics. So on one side, there is threats of a federal Department of Justice investigation into Chair Powell because they spent a lot of money on renovating the Federal Reserve's headquarters, and people thought that some of that spending was a little bit unnecessary. And then on the other hand, there's a Senator Tillis in North Carolina that has been threatening not to vote for the new Fed chair Warsh if this probe into the current Fed chair isn't dropped. Um, can you guys hear me? Okay, I've got Aaron. Can you hear me?
I can hear you just fine, Mike.
Yeah, we can hear you.
Okay, all right. My screen's frozen up a little bit here on Zoom.
Definitely
Um,
cannot see your
Okay,
screen
thanks,
right
Cole.
now.
So I think it's typical Washington politics, but there was a little bit of concern that if the administration was going after Powell and maybe some egregious spending on the Fed's buildings renovation, then Tom Tillis, who's a Republican senator in North Carolina, might not vote for, might hold up the new Fed chair's confirmation. And would we have a Fed meeting in June without a Fed chair? There was some concern of that happening. It sounds like the probe into Chair Powell is being dropped, and therefore the senator of North Carolina is going to push the nomination through. And I think that the nominee Warsh is really solid, a good nominee. He'll do a good job. Um, but it seems like the kind of partisan game that might have been taking place is resolving itself. So that's a positive. Um, Later this week, and the big news is we have PCE, or the personal consumption expenditure. That's the Fed's favorite measure of inflation, and that's released Thursday morning. Um, my computer's frozen up a little bit here, so I'm having a hard time sharing my screen. But if we look back at what the market's done for the past 60 days, we know that in the month of March, the bond market sold off at the beginning of the war. Oil prices spiked, inflation fears rose, and interest rates went from like 6 to 6.5. For the first couple weeks of April, interest rates came down and the market improved, and rates settled down in that 6.2, 6.3, 6.4 range. But they've been mostly flat for the past few weeks. And I think the market is now waiting for some resolution in two areas. One is what's going to happen with the war and the ceasefire, and how long is this going to drag on? And then the second thing is inflation going to creep back in? So we know there's going to be an increase in inflation with oil prices going up in the month of March, but the degree to which inflation increases will certainly be market moving. The consumer price index for March was released a week or two ago, and that showed that inflation spiked almost a
Oh,
full
sure, I'll a
point.
little bit.
That showed inflation spiked almost a full point. The PCE is the Fed's favorite inflation measure, and that's the next reading that we get this Thursday, and so that'll certainly be a market mover. So 8:30 Thursday morning, CNBC or Fox Business, watch that because that's going to be an indicator of what's going to happen in the markets this week. I wouldn't expect a whole lot of movement in interest rates the next 3 days, but Thursday, think the market's expecting inflation to surge up towards maybe 3.5%. If that is the case, I don't think the market's going to move a lot. But if it's anything hotter than
That's the
that, it could
other
be
head
bad news
office
for
across
mortgage
the street
rates.
and at my
If
dad.
it's lower than that, I don't think it'll necessarily be good news. But we're hoping that we don't see a bigger than expected surge. um, Cole or Aaron, can you guys still hear me? Because my screen's frozen, so I'm having a hard time sharing. But if you guys can hear me, I can keep going.
Yeah, we can hear you.
Okay, cool. Okay.
Yep,
All
you're
right.
good.
So,
Yes.
all right. So, other things that are on the radar this week. Um, I've got a chart that I can share with you, and if you guys want to copy of it, get with whoever you work with on our team. But we've talked a lot on this call for the past few months about unemployment in the white collar sector rising through AI, and we've talked about companies like Amazon and Meta, Facebook and Instagram. Um, Having significant layoffs as they implement AI technology and invest that money into AI infrastructure versus like human capital. And over the weekend, I found a chart. Fortune 500 employment. So think of the Fortune 500, mostly white collar jobs. It decreased for the first time in 8 years. And in the last 12 months, Fortune 500 employment has gone down by 400,000 people. And Fortune 500 employment, even in a bad economy, typically increases because those are the largest companies that are growing. If a company's struggling or files bankruptcy or they're downsizing, they might fall out of the Fortune 500. So I wouldn't necessarily say it's a trend that we have to look at that's troubling. I think it's expected and we should acknowledge it. And I think that's a trend that'll.
Now he froze.
Oh no, I think he's gone.
And he's out of here.
Chris has left
All
the
right.
building.
Aaron, take it over.
Yeah, he needs to upgrade the fiber.
He needs to hop in his truck.
Yeah, hop in the truck.
I bet he's having a heart attack.
Oh, yeah.
Well, oh, well, LSU got swept by Mississippi State this weekend, which was awful.
Nice.
blew blew several leads in those 3 games, but oh well.
Have y'all seen a big,
Let's see.
rush in the market lately in their area? I've seen a ton of houses come on the market in the last week in my area. A lot of activity.
Well, we are getting into the buying season, right? So
Oh, yeah.
we're coming into the end of school. I know we're all ramping up and moving, I have quite a few people actually trying to get under contract over the next couple of weeks. So I know that the summer season is in full swing.
I kind of feel like the whole rate discussion of we're in the fives or back up to a little bit of the sixes kind of starting to settle out. People are just okay with it now. They have to move, you got to do your thing. So, this is my opinion at least. A lot of good stuff going. Gotten real busy the last week or two.
Shit.
Yeah, absolutely. I mean, when touching on the rate thing, and I know Mike wanted to bring this up today, and I'll let him dig into this once he jumps back in. But after, basically we were hitting the high fives right before the war in Iran started. And then we gave back roughly, we lost about a half a point, maybe even up to three-quarters of a point in March.
Yeah.
Right. And we've gotten about half of that back. So in the month of April.
Yeah.
So as long as we get some definitive answers on the ceasefire, and I'm not sure, I haven't paid attention to what happened to it over the weekend, but we can actually start seeing some more rate relief and affordability come back into play, towards May and into June. And we expect, the rate spreads right now have been really helping our overall interest rates, right? The 10-year treasury, the 10-year treasury has been surfing right around the four and a quarter to 4.30 range, which is fine since the mortgage spreads between what the actual mortgage rate is and the 10-year treasury, that spread has kind of kept our rates relatively lower than they were in 2023.
Yep.
So we're going to see that moving forward. We're going to see that relief keep coming forward pending any major issues, right?
Yeah.
And Mike's I wonder if Mike's going to actually dial in on his phone.
Might.
And I
I'm
don't
gonna
see him
text
yet.
him.
Either that or he's running down to his truck.
He's booting up his wireless in his truck. Paul,
Yeah.
would you mind giving him a ring?
Yeah, I'll call him.
The question here.
I will call him instead of text him because he doesn't
Oh, question.
like messages.
Yeah, I have a
Yes.
question. Yeah, been in the business just for 5 years, and I've been kind of sleeping for, I just started really seriously like 2 months ago. But I wonder if you can give me an idea of. I noticed that there's a lot of like $1 million houses, $1.5 million houses that have been sold in the last 6 years, like 300 houses just like 10 miles radius from Orlando. So my question is, if this has happened before in Central Florida, and if all these people with money coming, because I counted, actually manually counted the houses, and out of 288 houses, half of them, 145, were paid in cash. So my question is, if these people with money coming to Central Florida, if that's going to benefit the economy, or if that's the trend.
You mean like the amount of cash buyers coming in on the
Right,
high
a lot of
volume?
cash buyers on the price point of 1.5 million or more.
Yeah, that's
Well, over the last 5 years, we have seen a influx of people relocating from high cost areas such as New York and California. So when those buyers were in town, you saw a lot of cash offers, them selling their home in California and moving here, very cash heavy buyers. And you saw that trend during COVID 2020, 21, 22. It kind of slowed down in 23 where we didn't see as many cash, but there's going to be cash out there because people are relocating, in Florida. Central Florida market is going to stay strong. I do not expect to see a big downtick in prices over the next 6 months or so, just because we're a highly desirable area. We have a ton of employers in the area. Our weather is generally good, and we've been hurricane free for a season, which always tends to kind of trickle us back into the positive area. As far as home prices, I see they've actually grown over the last 5 years. I see that stabilizing in the market. And if everybody would agree with me on that, I don't see appraisals that are coming in sufficiently over the asking price. And I really don't see them coming very far under. So, there's been a couple of appraisals that we've had over the last few months that might have been $5,000 or $6,000 less, but that is more about pricing at the original listing. And I think that's going to be an important moving forward. I think when houses are priced correctly and upfront and relatively move-in ready, they are going to move very fast, right?
Mhm.
But if there's a ton of work that needs to happen, that price point is actually going to come down, and that's where you're going to see, price reductions and so forth. So looping in those sellers, letting them know about that, and different price points will move at different speeds. So, that 350 or under range is going to be very quick. And I also see that middle range of that 800 to 1.5, those properties are generally relatively turnkey. And that's a very big generalization, but they are actually going to move a little bit faster. Now, as far as cash buyers go, which was your original question, I do not see an influx of cash buyers, but then again, we're not seeing that since we're on the lending side. We're actually talking to people that need money to purchase. So it looks like Mike is saying sorry about that, and he's going to key in here.
Yeah.
Well, we're gonna blame the Hilton at Lake Buena Vista where I'm at before Cheerleading Worlds finals are today. So I don't know what happened to my internet there, but I appreciate you guys. Thanks for jumping on, Aaron. Did you guys hear me talking about the Vantage score much at all?
No.
Okay, so the big news of the past week, I think I got into this before. I was like rambling on for like 7 minutes before I got a couple text messages like you're gone. Um, so for the first time in 8 years, employment at the Fortune 500 fell by 400,000 people. I'm going to share my screen just to show you guys this chart. It's something that we've been talking about for a while that AI implementation is gonna bring down increase employment, bring down the number of jobs being held, but it's white collar employment, which we all thought, go to college, learn how to work a computer, you're safe. That's changing a little bit. Um, and so for the first time in a long time, we saw a dip in employment at the Fortune 500. The last time was between 2016 and 17. So something that's not unexpected, but it's a little bit troubling, and it's something that we'll have to monitor. But if you think about people that are worried about their jobs, are they going to buy houses? Probably not. Aaron, you were talking about the market in general. I think you got a question on that, and we're seeing an increase in the number of contract cancellations. So contract cancellations went up to 13% nationwide when they reported those numbers last week. I think that's an indication of just a little bit of fear and worry in the market. If someone's a little bit worried about their job and their home inspection comes in bad, it's easier for them to say, yeah, that was a sign it wasn't meant to be. And so I think we'll have to, more than we always do, we'll have to play psychologist a little bit with our customers and to kind of keep people thinking clear-headed. So what I wanted to share with the Advantage score is, so for the past couple of years, the credit bureaus have drastically increased their credit costs. I remember, years ago, $50 for a 3 bureau credit report, and now that's north of $300 in many cases. And they're doing that for a couple of reasons, but one is there's a lack of competition. And so there's been all these credit scoring models developed over the past 5 or 10 years, and none of them have really gained like widespread implementation because government agencies like Fannie Mae or Freddie Mac or FHA didn't accept them. And so we couldn't originate a mortgage without a 3 bureau FICO score because we couldn't sell that loan to Fannie Mae or insure it with FHA. That's starting to change. Fannie Mae announced last week they're going to start accepting the Vantage score, which is a similar but different credit scoring model. And it's not a perfect fix, and it's not going to be an immediate overnight change that we'll notice. But the big picture is that the ability to use different credit scoring models means more competition. And if a monopoly, so FICO has a monopoly, if a monopoly starts to face competition, what are they going to do? They're going to get better and they're going to get cheaper. And what have the credit bureaus not been historically good at over the last 24 years that I've been in the mortgage business? They haven't been really good about getting rid of inaccurate information and being accurate. Like we all could tell stories of people who had errors on their credit that impacted their score or their ability to qualify for a mortgage or a car or something like that. So more competition, I think, will make them get better. More competition will also make them tighten up their numbers a little bit and get a little bit more competitive from a cost standpoint. It's kind of ridiculous that credit reports have gone from $50 to $300 for a 2 bureau, score in the last 5 to 7 years. So you won't see a wide adoption of the Vantage score model right away, but you'll start to hear more and more of that over time. And so I think that's something to watch for. But again, competition is going to be good. Aaron, did you guys hear me? Did I get through Kevin Warsh before I lost you guys in the Fed chair? And then, okay, cool. So we're good there.
Yes.
So he'll be confirmed soon because some of the kind of political, back channels have ended. The big news of this week, the PCE, the personal consumption expenditure, the Fed's favorite inflation measure, is being released this Thursday morning at 8:30. So make sure you guys are watching for that. Not sure if I got through that before you guys lost me. The market's expecting an increase in inflation, but the degree to what that increase is, I think, will be really important. I would not expect any real movements much this week until Thursday. I think talk of a ceasefire. We're kind of in that no man's land where uh, hostilities haven't increased, but the conflict's not over. And it seems like we're kind of waffling a little bit there, but it seems like the major hostilities that would have a bigger impact on oil prices are probably slowing down a little bit. I kind of feel like, and I'm curious to see what your all's opinions are. I don't think we're at war with Iran. I think we're at war with China. And here's why I say that. So, and you can use multiple reasons of why you might start a conflict, or like try to get rid of like a dictator in a country. So think about like when we went into Venezuela. We went into Venezuela, and it does a number of things. It certainly gets rid of a bad person, right? And like there's lots of Venezuelans that moved to Florida to escape what was happening there for the last decade. It also helps oil prices in the Western Hemisphere, because if oil production in Venezuela ramps up, more production means costs come down, and so that's good. It also hurts China because China got some really cheap oil from Venezuela. Um, Look at what's happening overseas in the Middle East. We don't really need the Middle East for oil like we did, in prior decades. Like we don't ship in a lot of oil from Saudi Arabia or Iran like we did, in the 90s. But who needs Middle Eastern oil? Iran needs Middle Eastern oil. Um, and so think about the tariff fights. Like in 2025, we imposed tariffs on, certain countries. Putting tariffs on bananas from Brazil was, maybe a symptom, but who were we really trying to go after for unfair trade practices? We were going after China. Who's our biggest competitor on the global stage economically? China, right? Not militarily. Like we could never get into a military conflict with China. Just too much power between the two countries. Same as Russia. Um, like the Ukraine war, what's that about? That's about rare earth materials, because the area of Ukraine, or not, and there's many reasons, but like it just so happened, like where in Ukraine did Russia go in? Where there's a lot of mining of rare earth materials. And so I think energy runs the world. And so is the conflict in Iran mostly over from a missiles and bomb standpoint? It feels that way. But the economic war, and I think that's kind of what we're shifting to, is if we blockade the Middle East, they can't get oil out. Does that directly hurt us? Yes, but not to the degree that it hurts China, right? And so we're fighting a economic war with China. So all that said, I think this conflict in Iran is going to be slow to resolve itself. Economically, I think militarily, it's mostly done. Hasn't been a whole lot of activity in the last few weeks. Outside of threats, we can do something to you, but economically, I feel like it's going to take a little while. Like if we look at the tariffs in 2025, how long did it take for those to kind of shake out before things were resolved? It took a few months, right? And so we may be in for another month or two of kind of unofficial war with Iran that doesn't involve like missiles and bombs, but more of like a economic war, that the blockade we're trying to do, which would hurt Iran, but it would actually hurt like China, who we're competing with on a global scale economically. So I don't think we're going to see a fast resolution to that. But any ceasefire talk, could be positive for interest rates. Last thing I've got for you guys, I always like to throw a sales tip in, and so I'm going to walk you guys through a past client's kind of follow-up flow. I think, is it cheaper to, and someone answer this question for me, is it cheaper to acquire a customer or retain a customer? What's cheaper, acquire or retain?
Retain.
Okay, retain, right? Like not even close, right? It's cheaper to retain, okay? And so what do most of us on the call here, loan officers and realtors, not do a great job of? We don't do a great job of retaining our customers. And why is that? It's because they don't buy frequently. It's easy to retain a customer if you sell insurance and they renew every year. But if you sell a product that people don't purchase outside of every couple of years, it's hard to retain them. Um, like I have never bought a car at the same car dealership that I can recall, right? Like maybe 10 cars between, my wife and I and our kids. I don't think I've ever bought one from the same car dealership, right? Um, and that's because those purchases are infrequent. Um, but I get my insurance from the same company, car, home, umbrella, liability, whatever. Right? Same people can do it all because it's consistent. And so for us, the challenge of retaining customers is people buy infrequently, but we have to think of our customers not as the next house they're going to buy or sell or mortgage they're going to take out, but the network of people that they know. And I think a lot of us would say that once you've helped someone purchase a home, get a mortgage, and it's been 2 or 3 years since you've talked to them, it's a little bit difficult and maybe sometimes awkward to reconnect with that person and keep that relationship active. And so the best way to retain those customers is just never to lose touch with them. From the day they close, when they're happy, and we take that cool picture in front of the house with the key at the title company, like how do we maintain contact with them so we never lose contact with them? So we retain them for their next house, even if it's 7 years down the line, but we also get referrals and connections in the interim. And so I want to walk you through kind of a 5-step cadence that we feel like is really successful to keep that relationship strong post closing for the next 12 months and then beyond. And so there's 5 phone calls or check-ins that I feel like if we do, we'll be successful at retaining. And after this, we'll wrap it up for the day. And sorry again for the tech issues, guys, and thanks, Aaron, for rescuing me there. Um, I'm not sure how long I rambled on without until I knew I was off. Um, so post closing, okay. So not the day of closing or the day after closing, but about a week after closing. Okay, let them get moved and settled, and let the stress level die down a little bit. We should all be making a post closing phone call, which should be a thank you, and then it should be setting them up for what our future communication is going to look like. So our first phone call is mostly a thank you. How did we do a survey, and keep us in mind for your future business, but also your friends and family. But then setting them up for future phone calls. So my first phone call might look like, thanks, Rhett, survey, how we do, keep me in mind. And then, hey, by the way, you're going to get a lot of stuff in the mail. The only 2 things that matter are your mortgage coupons and information about filing for homestead. Don't stress. I'll call you in a month or so to make sure you got that and help you make sure you get those taken care of. Right. So setting up the future phone call. So post close is the first phone call. The second phone call is around the time of their first payment. If you're a realtor, how do you know when their first payment is? Skip a month, right? So if someone closes in April, first payment's in June. So we're always calling around the end of May for someone who closed in April. So April close, call them end of May, first payments in June. So you could also call that a 30-day post close. But that's where you continue to build rapport. How's the house? Do you guys like it? Have you have you done the painting or the carpeting or the furniture that you told me you were going to do? That's kind of like a little rapport building. And then make sure they know how to get their payments made or file for homestead exemption or things like that. That's a good opportunity also to introduce your vendor referral list. So like, hey, by the way, if you ever need a painter, handyman, roofer, plumber, pool guy, whatever, I got them all. Here's my list. So post close, first payment, a 6-month check-in is really effective. Hey, it's been 6 months since you closed. How's the house? Do you love it? How's the neighborhood? And then a reminder to file for the homestead exemption. That varies by state. In Florida, we have to file by the end of February. Sometime in January, that's a great check-in. And then your home anniversary, so the 1-year anniversary. Can you believe, gosh, time flies by. Can you believe it's been 12 months? And so those 5 steps, just want to leave you guys with that sales tip. So when someone closes, post-close a week later, first payment, 6-month, homestead reminder, home anniversary. If we do those 5 touch points within the first 12 months of their buying, that's how we'll retain them for life. Thank you guys for jumping on today. Sorry again for the tech issues. Appreciate you sticking on Thanks, Aaron, for saving us, and we will see you guys next Monday. Thanks, everybody.